This news out of the White House, actually from the Fed first and then the White House, is interesting because what could they have to talk about? It seems like all the macro desks that have been getting more constructive are citing Fed purchases as a big reason for that.
Yeah, well, I think it's just interesting also because, if you listen to any earnings call over the last 6 months, how many of them are really bellyaching about their cost of capital being, not high, not low enough? But there was some bellyaching about trade there, and
dollar strength too, yeah, sure.
And dollar strength, sure, right, which does flow into it. But the dollar strength has been persistent, but it hasn't been dramatic. It's not a replay of the 2015 and 16 dollar strength, which really threw earnings off, right? I think it's been a more gradual, steady rise, which I think has allowed certainly CEOs to kind of manage that a little bit more effectively there, or at least to manage the street better on that.
You think spending confidence then returns in 2020?
Well, I think when you say spending, you're talking about corporate investing,
yes, yeah.
Right? That really comes back to some clarity about policy. And the problem with making that judgment that it's going to suddenly surge is that even if Trump were to get clarity on trade, we still don't know whether he's going to be president after next year, right? And so there's a huge uncertainty principle. And I think that risk premium, while I'm constructive on the markets broadly into 2020, that risk premium has yet to really get developed, and I think it will develop. You're starting to see some imprints of it right now in some asset classes.
Jim, do you agree with that, where risk premium is concerned? I mean, we're coming off of record highs for the markets right now, but so far the data's been kind of mixed. The Fed has signaled it's going to pause. I mean, it's not particularly jubilant in terms of all the different, factors that an investor could take account of.
I think that's true, Morgan. I think there's still, we don't have the same fear that we had, in August, let's say, when there was just intense recession fears. But I still think there's a lot of apprehension about things, including whether we actually get a trade deal done or not, whether the economy is going to pick up, whether profits are going to start to rise. I still think there's a fair amount of hesitation in the market. We're seeing some really decent moves in risk-on plays, whether it be bond yields rising or cyclical stocks or international stocks doing better. But I think that has a lot to do with the fact of how under-owned most portfolios were in those areas. And just a little bit of portfolio flow can make a pretty big outsized move in some of these assets.